Hey traders, how's it going? Welcome to our second live trading session of March. We're back, and today's session is all about precision, strategy, and also making sure that you're always in the know in the financial markets, whether you're trading digital currencies, currencies like GBP USD, Euro USD, or you trade stocks as well. This session is for you. All right. Let me know if you guys can hear me clearly in the chat. You guys go ahead and let me know if you can hear me clearly in the chat. Now, if you're starting out as a beginner trader or you're already experienced, showing up for these sessions, these live trading sessions means that you're already committed to growth, and understanding exactly how these markets work. And that is what separates consistent traders from other traders. But guys, before I go on to talk about this session, I want to be sure that everybody can hear me in the chat. So go ahead and let me know if you guys can hear me, and we'll dive right in. All right. Perfect. Everyone can hear me. Once again, guys, welcome to the live trading session with Octa. Now, I want you guys to understand that trading the financial market is not just about, charts, indicators. It's about understanding the market, knowing when to act, knowing how to make smart decisions, calculated decisions. And sessions like this, when you join sessions like this, it gives you the opportunity to refine your skills and also to learn new strategies, and most importantly, to also do the three core things I always tell traders about: discipline, patience, and consistency, because these are the things that you need to succeed. So if you're here, you're already ahead of the traders who rely on guesswork instead of the knowledge. So let me go ahead and see in the chat your city or your country, or even if fire emoji, so that I can know you guys are ready to dive into this session. So go ahead and drop your city or your country or a fire emoji, so that I can know that you guys are ready to dive into today's session. Now I'll give you guys a quick tip. The more engaged you are in today's session, the more value you get from the session. And this is going to be a very interactive session, because I'm going to also ask you guys some questions and take your questions as well. Now, while you guys do that, type your country, your city, or the fire emoji. I'm going to go ahead and read the disclaimer. Any opinion, news, analysis, research prizes, or other information discussed in this webinar or linked to this presentation is provided as general markets commentary and does not constitute investment advice. Now, if you don't know who I am, my name is Ambrose. I've been in this market for 5 years, and I've honed my trading proficiency and contrived various profitable strategies that include swing and scalp trading. I mostly analyze gold, which we're going to be looking at today, GBP JPY, GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest trading strategies for effectiveness. So what do we have on today's agenda? We're going to look at the economic calendar. Now, most traders don't like to look at the economic calendar, Let me not say they don't like to, but they just ignore that aspect of trading. But after today's session, you'd see and understand why it's important to check the economic calendar before you start trading. We'll break it down. I'll go ahead and analyze it. I'll show you how to read it, why it's important, and how you can use it to avoid getting caught off guard by major market news. So no more surprises. You're going to be able to trade with clarity and confidence. We're going to review the dollar index. I'll explain what it means and how you can use your understanding of the dollar index to trade other pairs, and then we'll review Octa Trader. All right. Now, a lot of traders don't like to take full advantage of the trading platform, but I'll walk you through the key features inside of Octa Trader that can help you execute better, and also manage your risk efficiently, and, generally just maintain control over your trades. Let's see the people that we have on the charts today. Raymond from Nigeria, Savage, South Africa, Wisdom from Osun State, Nigeria, another Wisdom from Imo State. Okay, Raymond is from Abuja. Welcome, guys. Welcome. Lawrence from Lagos. Yusuf from Abuja. Guys, welcome to this session. This session is mostly about trading with purpose and confidence. If you can master this aspect, you would have the most important tools that you need to approach the market with a solid strategy. So instead of just reacting to price movements and trying to gamble your way, you would understand the great and good approach to the market. And of course, for those of you that stick around till the end of today's session, I've got a special gift for you. It's an exclusive promo code just for you. It gives you a 100% bonus on your deposit, but you have to stay to the end for me to review the promo code. Now, before we get started, guys, let me know in the chat, what's one thing that you're focused on improving on your trading right now? What's one thing that you're focused on improving in your trading right now? Is it risk management? Is it your strategy? Is it discipline? Is it psychology? Drop it in the chat and let's make today's session count. This session is going to last for about 45 minutes. So you can use the YouTube live chat. I'm going to be checking constantly. Use the YouTube live chat to ask your questions during the webinar or during the session, and I'll check it to answer all your questions. But yeah, the question was, what's one thing you're focused on improving in your trading right now? Whatever it is, risk management, over trading, over leveraging, excuse me, whatever it is, let me know in the chat, guys. Okay, patience, discipline, strategy, and risk management. These are important aspects that traders need to understand. And by the end of this session, I believe that you would get the information and the knowledge that you need to improve in these areas of your trading. Now, if you're ready to go to the economic calendar, go ahead and drop "I'm ready" in the chat. If you're ready to go to the economic calendar, go ahead and drop "I'm ready" in the chat, guys. Oh, I see some people still dropping some answers. All right, discipline. I'm forced to improve my approach to the charts because I'm always afraid. Strategy and discipline. Strategy. Guys, at the end of this session, whatever you want to improve on, I strongly believe that you get the knowledge that you need to improve in that area. Now, I just went to the Octa economic calendar. You can go to the Octa economic calendar from your Octa trader platform right over here, or you can just go to Octa website, the official website, and come to analysis and education and come down to the economic calendar. Now, today, and this is one of the reasons why I always tell you guys, you want to include medium impact, right? Because if we had only looked at high impact event, let me show you guys how many events we would have had today. We would have only had one event to observe, right? But we had some other good events that is worth observing. So you have to include medium impact. If you're a beginner, you can also include low impact event. I see everyone is ready. We're getting started, and hopefully you're not just ready to listen, but you're ready to learn. So if you have like a note or a pen, bring that out and join the session. All right, and pay attention as well. Okay, so as I was saying, beginner traders, right? You want to also include low impact events. Now, this is the Octa economic calendar. When you come to this calendar, if this is your first time, there are some things that I want you to take note of, right? The first one would be your time zone. You need to make sure that the time zone is set to your current location, because every time that you see here shows the time that this economic event or this report will be released in your time zone. So if you make a mistake and you put Hawaii when you're not in Hawaii, or by default is in a different location, right? You would have missed out on all these events. You'll be looking at the PPI coming out at 2:30 a.m., which wouldn't be the case, right? So just ensure that it's accurate, it's set to your current location so you don't miss out on this event. That's one. The second thing you want to check is the advanced filters, right? If it's on only high by default, as a beginner trader, you also want to pay attention to the medium and the low impact events. All right, you want to pay attention to that. And yeah, if you're interested in news from any of these countries, you can also tick that. I've already, I mean, this is going to be the default, right? But if you have any extra country that you're interested in observing, there news events or economic reports, you can always add that as well. And also the category, if you have an interest in or non-interest in any category here, you can tick that out. But if you're a beginner trader, just leave these check boxes the way they are and make sure medium and low are checked so you don't miss out on any event and you get the knowledge of the low impact events as well. All right, I think that's it. And in terms of time range, you'll be looking at events for the week, the week ahead, the month. I mean, the Octa economic calendar is super amazing. It goes ahead to show you the events of the month generally, so you can always stay ahead. And even for next month as well. Oh, we don't have for next month yet, but the week, the previous week, the previous month as well, and as much as to the end of this month. But today we'll be focusing just on today's event. Okay, so that was just a brief introduction on how to get your economic calendar set and get you started if you're a beginner. Now, we're going to briefly analyze these economic events that we've seen here. But before I go ahead to talk about that, I want to ask you guys, how many of you use the economic calendar before you start trading? Let me know in the chat. If you use it, let me know in the chat. If you go ahead, like when you wake up in the morning, or maybe not in the morning, but you want to look at the charts, look at your trading app, and you just say, first, before I look at my trading app, I need to use the economic calendar. If you do that, let me know in the chat. Patience from Abuja, welcome. If you use the economic calendar before you start trading, let me know in the chat, guys. Okay, we've got some answers in the chat. Now, if you don't, that's fine. After today's session, I'll give you guys, from the explanation, you'd obviously see reasons why you should be using it, or why you should basically just be aware of the economic events. Now, when you look at the economic calendar before you trade, it creates that sense of awareness that these are the economic events that will be happening today. Most traders just believe that NFP and CPI and the FOMC are the most important events. But just like today we had PPI, most people don't know about PPI. We also have events like PMI, right? This is for New Zealand, but we also have PPI for the US, PPI for Australian dollar as well. These are PMI rather. These are events that you should be aware of, not just the major NFP and CPI. So someone is saying this is the first time they're hearing about it. That's amazing, actually. I mean, this is your first time, but hopefully it's not your last time. Okay, we're going to start with the consumer inflation expectations for the Australian dollar. Now, you want to pay attention to what goes on here, because this tells you the currency that this event would influence, right? Now, if you want to get a definition of whatever this event is, a brief explanation, you can just click on it and it drops down and shows you what the event is about and how it influences or how it affects the domestic currency or the currency in subject. In this case is going to be the Australian dollar. So a high reading should be seen as positive or bullish for the AUD, while a low reading is seen as negative or bearish, right? Now, if you look at this economic event, we had a previous report of 4.6%, and we currently have today an actual report of 3.6%. Now, tell me in the chat, guys, is this a high reading? Is the actual report a high reading or a low reading? Let me know in the chat. Is it a high reading or a low reading? Actual 3.6, previous 4.6%. Did we get a high reading or a low reading? Let me know in the chat, guys. Exactly. We had a low reading. Now, if you don't know what this is about, the consumer inflation expectations, again, you can read here, but I'll go ahead to explain to you guys what it's about. Someone said the screen is not showing clearly. So if your screen is not showing clearly, you can click on YouTube settings, just on the video, tap on the video. At the top right, you see the setting option, and you can change the quality to take it out from auto and put it in advanced, maybe 720p or 1080p, so you can see it clearly. All right. If you keep it at auto, YouTube can change it back to low reading and high reading and all that. So that's one way you can, low resolution rather, that's one way you can increase your resolution and see the screen clearly. But if you said low reading, you're correct. We had a low reading, and obviously you're seeing here that low expectations are seen as negative or bearish. Now, to help you understand better, consumer inflation expectations measures how much consumers expect price to rise in the next 12 months. So if people expect high inflation, they might spend more now before the prices go up. And when that happens, it increases the demands and push the prices higher. I'll give you guys an example, right? This is Australia. So let's use Australia. Imagine you live in Australia and you believe that inflation will be high next year. You might just decide to buy a laptop now instead of waiting, for next year, because you believe it will be more expensive later. Now, if many people think this way, the demand increases, the demand rises, and it increases inflation. Now, we had a lower than previous reading from 4.6 down to 3.6. What this shows is that Australians expect inflation to slow down, meaning the RBA, the Reserve Bank of Australia, may not raise the interest rates. And we could see the Australian dollar possibly go lower because expectations from inflation can reduce the urgency for higher interest rate, just like I said. How many of us understand? Let me know in the chat. If you understand, let me know in the chat. So if the expectations had increased, we would have considered buy options for Australian dollar because a stronger currency is expected. But since the inflation expectations fell, we'll look at selling Australian dollar because we can also go to the chart to see how the Australian dollar reacted to this news. But guys, if you understand the consumer inflation expectations, let me know in the chat, guys. So just to briefly summarize it, if we had a high reading, we would have considered buying AUD because a stronger currency would have been expected. The inflation expectations fell. It's lower than the previous, which means we'll look at selling the Australian dollar. But again, we'll go over to the charts and check and confirm all this as well. Okay, I understand. Perfect. I love the fact that you guys are following this session. Now, the next one is the European Central Bank, de Guindos speech. How many of us know who he is, Luis de Guindos? He is the vice president of the European Central Bank. Like I said, you guys, you can always click to know, the definition of these events, right? And the ECB is the main bank that controls the euro currency and makes important financial decisions for the Eurozone or Europe. So when you look at, excuse me, guys, when you look at these speeches, right, from the European Central Bank, you have to pay attention to them because they can give you hints on interest rates, they can give you hints on inflation, hints on the economy as well, give you a broad view of the economy, and you position yourself to be able to pick out some clues about future policies. But today he mostly talked about climate related risk and all that, how this climate change can cause natural disasters, flood, wildfires, all that. And obviously when these things happen to a country or to a zone, what happens is it can lead to damage in businesses, in homes, in infrastructure, and all these things can create some major financial losses. Okay. So yeah, very important that you pay attention to the speeches that come from these high profile people from the central banks. In this case, it's going to be the ECB. In Australia, it's the RBA. They can give you hint on monetary policy for that currency. All right, industrial production. So just to give you guys an explanation, the MOM you see here means month over month. Okay, month over month. Now we had an actual report or an actual reading of 0.8%. We had a previous reading of minus 1.1%. And now we have an actual reading of 0.8%. This was going to be a bit tricky for you guys, but I'll go ahead and ask you guys anyway. Before I ask you guys, remember, a high reading is seen as bullish for the euro, while a low reading is seen as bearish. Now, tell me guys in the chat, is this a high reading or a low reading? Is this a high reading or a low reading? Let me know in the chat, guys. The industrial production month over month for the Eurozone, is it a high reading or a low reading? Let me know in the chat. So this event measures how much goods the European factories produce in a month. More production means a stronger economy, while lower production means slow growth or, potential recession risk. Let me know in the chat, guys. Is this a high reading or a low reading? So just to help you understand what the industrial production means, I'll give you guys an example. Imagine a factory in Germany, producing more cars. What it means is higher industrial production. It's going to lead to more jobs, and more jobs would lead to economic growth. But if production falls, they will need fewer workers, right? And the economy is going to slow down. So we had an actual reading 0.8%. We expected 0.6%. But here you can clearly see that the economy performed better than expected, which is positive for the euro. Last month we had a negative 1.1. So this is this looks like a recovery, and it's a good sign for the euro. So if the production keeps improving, we'll look at buying the euro in the long term. But let's see what you guys answered in the chart. High reading, high reading, high reading. Lovely, lovely, lovely. Correct answers. High reading. If you said high reading, that was a correct answer. And I'm hoping that you understand, how this impacts the euro. Now let's look at the PPI, one of the popular events that we had today. Well, I think it was the most popular event we even had today, but we're going to look at the PPI, and I'll explain to you guys how this affects the US dollar. So I'm going to go ahead and click that. Producer price index year over year. Now, again, if you want to get the definition of what, or the explanation of what each report means, you can always click and read here, and then you pay attention to this last sentence, okay? So the producer price index in itself, it measures how, or how much prices have increased for producers over the past year. Remember, this is year over year. YOY means year over year. MOM means month over month. Let's see if you guys have any questions. No questions. All right. So if the cost of production go up, businesses might pass this cost to consumers, and it will increase inflation. Now, let me ask you guys a question. How many of you have gone to buy bread, right? And when you go to buy bread, let's say you used to buy this bread for 500 naira, okay? Or let me use a general currency. Let's say you buy this bread for $1, and now this bread is selling for $3, and you ask the seller, I used to buy this bread for $1, and the seller says, well, it has increased to $3 because, the cost of flour has increased, the cost of, baking soda has increased, the cost of this. How many of us has been in that situation where you go to buy something and then the seller is like, well, the materials we used to create this has increased, so we also increased the price. If you've been in that situation, let me know in the chat. This is what it's about, producer price index. You can see how this economic events even affect your everyday life. Guys, all these things are interconnected, and that's why you need to understand exactly how it works. Let me know in the chat, guys. So if the baker, if he pays more to buy flour and other materials required to produce bread, he's going to increase the price of the bread. That leads to inflation. Because now the buying power of that dollar has reduced. Now you need more dollars to buy the bread. Right? Now, if you look at the reports, we had a 3.2 actual reading today. The forecast was 3.3 and the previous was 3.5. Again, generally speaking, a high reading is seen as positive or bullish for the USD, But in this report, what did we get? We got a low reading. This is slightly lower than the forecast, meaning inflation is easing a bit, but it's still high. All right. And this also means that the Fed may not need to rise or increase the interest rates aggressively. So if the PPI was higher, I would have looked at, okay, improvements in the dollar. But since the PPI is lower, we're going to consider selling the US dollar, which is already weak anyway. But yeah. Again, this is for year over year. We're going to look at the next one, which is the producer price index, excluding food and energy, month over month. Now, this PPI report removes food and energy, because they're highly volatile. Oil prices, all that. It gives you a clearer picture of inflation. Okay, so they just have to remove these so they can help traders see if inflation is truly rising. Now we have today an actual report of negative 0.1%. The previous was 0.3%. Is this a high reading or a low reading? Let me know in the chat, guys. Is this a high reading or a low reading? Minus 0.1% as compared to 0.3%. And it's very interesting because the forecast was 0.3%. So what this means is that the prices actually declined. And remember, if inflation is cooling down, we're going to potentially see a weaker USD. But let me know in the chat, guys, is this a low reading or a high reading? Exactly, a low reading. If you said low reading, correct, and you're looking at a continuous weaker USD. Month over month, PPI. Remember, the first PPI we looked at was the PPI year over year, and now we're looking at the PPI month over month. And this report goes ahead to measure the monthly price change for producers. In this case, the price remained the same, 0%. What it means is that inflation is stable, right? If a shoe manufacturer pays the same price for materials as last month, it means that inflation is not rising. Okay, so the Fed has less reason to increase the interest rates, which means it still has a slightly weaker effect on the USD. Let's look at the year over year for PPI that excludes food and energy. And again, the year over year just shows you the yearly change in producer prices. Now, again, we had a negative reading today, which is 3.4%, as compared to the previous 3.6%. Shows you inflation is slightly lower than expected, but it's still a bit high. And again, we're still going to be looking at or expecting a weak USD. If you understand, let me know in the chat. If you understand, let me know in the chat. I know some of you might wonder, okay, we have the month over month, we have the year over year, right? Which one should we focus on? First, you have to understand how both of them work. The PPI month over month, and this goes for even other CPI, for example. Month over month measures the change in prices, in producer prices compared to the previous month. And you have to think of it as a short-term indicator. Year over year looks at the change in producer prices compared to the same month last year. Okay, it compares it to the same month last year, and it gives you like a wide or a broader picture of inflation trends. And it's more useful, if you're looking at long-term economic outlooks. So in my opinion, I mostly prefer to analyze based on the reports from the year over year. It gives me a sustained inflation trend. It doesn't give me short-term inflation. And the Federal Reserve looks at year over year data when making decisions about interest rates. All right. I mean, month over month is still useful, but it's less important in my opinion because it shows short-term price changing and it can be noisy. So it's just like using the 5-minute time frame to analyze the market. It's not going to give you a clear picture of the trend, right? All right, everybody understands. Now, if you do not understand the explanation, guys, this video is going to be saved on the Octa Broker YouTube channel, so you can always come back here to watch it and understand the explanation. But in terms of the PPI, both the year over year and the month over month came in lower than expected. So traders would anticipate that inflation is cooling down, which would reduce the pressure on the Fed to, increase the interest rates. And I mean, the USD is already weak, but it's going to also lead to short-term USD weakness. So in this case, we're not expecting a bullish USD anytime soon. Should we analyze this one? Okay, let's look at this one. Initial jobless claims. This is a medium impact event. Like I said, guys, you should always look at medium and not just stick to the high impact, because you might miss out on these events if you only stick into high impact events. Now, initial jobless claims, what it basically does is it tracks how many people applied for unemployment benefits last week, right? So if fewer people apply, it means the job market is strong, and if the job market is strong, it's good for the economy. So I'll give you guys an example. If a company fires 5,000 workers, those workers would apply for jobless benefits, and it's going to increase this number. But if fewer people lose jobs, then the number is low. In this case, it was forecasted, excuse me guys, it was forecasted for 225,000 people, but we had an actual reading for 220,000. What it means is that fewer people applied for jobless claims, right? And it means the job market is stronger than expected, which is expected to be bullish or strong for the dollar. All right. But again, this is a medium impact news, and you might not see much of a difference in the dollar. Okay. Because if I show you the dollar trend right now, you'd clearly see that it's on a huge sell-off to the downside. The last time we analyzed the dollar index, we looked at the possibility of a retest here, which he has already did, or already done rather, which he has already done, made a retest here. And again, guys, I always tell you, these markets move like a magnet. Okay, if you understand the key levels, you have an idea of the potential area of retest. And that's why it's good to, combine your understanding of the fundamentals with your understanding of the technicals. Now, the final report we had today was the business PMI for the New Zealand Purchasing Managers Index or Manufacturing Index. Okay, let's see if we got any questions before we talk about that. No questions. Now, if you want to understand the definition of the business NZ PMI, you can always check here. Look at the last sentence to know the influence that it's going to have on the New Zealand dollar. If you trade GBP NZD or NZD USD, this news is important. It's good for you. It's going to be released at 10:30 West African time, or Nigerian time rather. So it's not out yet, but just to explain what it means so you guys can get an understanding. The PMI is a number, right? It's usually between 0 and 100, but the magic number that I want you guys to remember is 50. So if the report comes out above 50, it means that the businesses are expanding. It's good for the economy, and it's also good for the New Zealand dollar. If the report comes out below 50, it means that the businesses are slowing down and it's bad for the New Zealand dollar. If it comes out at 50, it means there's no change and the businesses are staying the same. All right. And you know what to do. If it's good for the economy and it's good for the currency, you want to buy that currency. If it's bad for the economy and it brings down the currency, you want to sell that currency. But again, it's going to be released at 10:30. So keep that in mind if you trade NZD. Now we're going to briefly look at the dollar index before we go over Octa Trader. And hopefully, let's see. Guys, again, if you have any questions, you can always ask me your questions in the chat, all right? Now, this is the dollar index, DXY, whatever you know it as. You can know it as the dollar index, you can know it as DXY. If you don't even know what it is, the dollar index or DXY, DXY stands for the US dollar index, and it gives you the value. It helps you understand the value of the US dollar compared to 6 major currencies. We have the euro, which is the biggest part of the index. We have the Japanese yen. We have the GBP. We have Canadian dollar. We have Swedish krona, and we have the Swiss franc. The Swiss franc makes up the lowest part of the index. The biggest part of the index is the euro, and then JPY, GBP, Canadian dollar, the Swedish krona, and the Swiss franc. Now, how does the DXY work? Right, a lot of times, for most of you that are used to me analyzing the dollar index, you would notice that if the DXY goes up, it means that the dollar is getting stronger compared to these currencies. I'll give you an example now. If you look at the dollar index, you can see that it has been trending downwards, right? Remember, I mentioned euro and GBP. If we check these currencies, you see that they're trending upwards because the dollar is going down. Let's check euro as well. The same thing, right? So if the dollar index goes up, it means the dollar is getting stronger compared to these currencies. If it goes down, it means the dollar is getting weaker compared to this currency. And as you can see, the dollar has been losing value recently. We had a huge drop all the way from here, and that's been trending all the way to the downside. And I always tell you guys, when you understand how key levels work, I'll give you an example, right? This level is a level that we mapped all the way from this point as an area of interest or a key level. You can also call it an area of significance. What it basically, whatever name you want to give it, what it basically means is you're looking at the market making a retest at this level. And why is this a major level for the dollar index? You can see that the market created resistance here, support, and has come back down here to create another support. Now, the more the market tests a level, the stronger it is. The stronger the level is, the stronger the bounce or the break. That's what I want you guys to understand. Now, if we successfully break below this point, this is the next area. This zone is the next area we're looking at the dollar trading in the coming weeks. If we successfully break below this key level, the dollar is already weak. We're even expecting the dollar. There's no indication for a bullish dollar in the coming days. So all we're going to be doing is to be selling the dollar until we see a change in trajectory from the technicals or even from the fundamentals. Now you might be wondering, why is the dollar losing value? Look at dollar as, or imagine the dollar to be a very popular brand. When people trust it, they want to buy it a lot, they want to use it. But if problems start to show up, people may start to look for alternatives. Now we have trade wars with other countries going on with the dollar. The US has put, what we call tariffs, extra taxes on goods coming in from other countries, steel, aluminum. And these countries have also, in response, put tariffs on American goods. This back and forth trade war makes businesses and also makes investors nervous. And when investors see trouble, in business, in trade, they don't want to keep all their money in dollars. It makes the currency weaker. Let me know if you guys understand. If you understand, let me know in the chat. If you understand, let me know. Guys, it's very important that whatever you trade, you need to know how it works and what drives the market, what drives that particular currency or that particular instrument. Let me know in the chat if you guys understand exactly why the dollar index is trending downwards. There are a lot of reasons, but mostly that, and also what I would call the de-dollarization of the dollar. There are some countries that are trying to use their own currencies instead of the dollar for international trade. It's what we call the de-dollarization. When fewer countries need the dollars, the demand for the dollar drops and it makes it weaker. Some investors are also losing confidence in the dollar as well because of this, like I said, trade wars, conflicts, Let's see. Okay, everyone understands. Perfect. So again, guys, we've done the analysis on the fundamentals, and from our understanding of this analysis, we're going to see a more weaker dollar. We don't expect any bullish move on the dollar right now, unless we get to see the economic events or the fundamentals indicate that, or even a reversal pattern shows up here, or we see sell rejection. But the more the dollar index continues to trade below this our key zone and also below this one as well. Let me just make this one, let me highlight this one properly so everybody can see. As long as we keep trading below the swing high that we have here, the most recent swing high that we have here, the dollar is still pretty much bearish. All right, especially when you have things like this, when you see retests like this, when you see rejections like this, guys, you have this one and this one. It's interesting how far back you can trace all these lines, and the market still, for some reasons, respect it. So when you trade without key levels, it's like you're trading blindly. When you trade without zones, it's like you're trading blindly, because these zones, the market tends to respect these zones more often than not. So what does a weak dollar mean for you as a trader? If you trade the financial markets and you trade dollar, a weak dollar means other currencies like the euro or GBP would continue to gain strength against it. So you'll be looking for buy opportunities in pairs like this. Imagine you had that understanding. Imagine you had the understanding of a weak dollar all this while, and you decided to buy at the bounce of these trend lines, obviously with confirmation. Well, you decided to buy at this bounce of this trend line where you have the alignment of this key level as well, which we discussed the last time. We had the retest, the breakout, the slight pullback. You can see all these reactions to these key levels and how the market pushed past them. And you can see that the market has come all the way up. I'm going to extend this to make a retest at this significant zone. Now, if you were looking at this market, obviously, this would have been a significant zone for you because you'd have been able to trace it all the way back to market reaction here. And this would have been an area of take profit for you. Whatever the market decides to do here will determine your next line of action. If you get a potential break and a retest, and we see buy momentum kicking at that retest, we want to continue to go long. Trading the zone is very simple. Understanding how supply and demand works can help you a lot in this. Before any other thing, if you choose to further your knowledge on, more advanced systems like the fair value gaps and all that, inducements in trading, liquidity grabs, all that, which are still the same thing. But if you choose to go more complex without understanding this supply and demand, it could be difficult for you to grasp that, and you could make a lot of mistakes. The same thing goes for the euro dollar. All right. As a matter of fact, you're looking at these zones as potential areas for buy, because again, you want to buy when the market is low, right? We've already had the impulsive move to the upside. We need the market to come down a bit low so we can buy again. So you're looking for bullish opportunities around here. If you see the dollar, guys, let me just go back to the dollar and show you guys. If the dollar successfully breaks below this point, guys, and you trade Euro USD, you're looking at buy options, buy opportunities, because this is very, the correlation is very clear. All right. And these are the zones that I'll be looking out for in the Euro USD market to tap in some buys and make some profit, potential profits. Which sites are you reading? Are you using to read all the economic indicators? I use the Octa economic calendar. I use the Octa economic calendar. All right, guys, quick introduction to the Octa trader. Now, when you use the Octa trader, obviously all this information can seem like a lot, but I'm going to break it down to you guys briefly. Over here, we have all the instruments you can trade. Anyone you like, anyone you are familiar with, you can always use this star to make it your favorite one. You can see I already have some favorites here, so that I don't need to start scrolling to look for it. I can always come to favorites, click on it, and I have my favorite pairs here. All right. You can choose from metals, indices, crypto, all that, right? And then, excuse me, guys, this section is for the chart. So if I want to look at the gold chart, it shows up here. This is the gold chart. You can always use Octa tools to analyze the market. You have these amazing tools here. The same thing, you can use it to extend. You can also use the trend line that you have here. Where's that? Yeah. So we have the instruments, we have the charts, and then whatever trade you execute on this chart comes down here as an open trade. If you have pending orders, you can click on pending to see the orders that are pending. And one amazing tool I want to show you guys, well, there are a lot of amazing tools here, but the one that I want you guys, especially the traders that are always quick to execute trades, it's the alerts. You can set an alert and say when the market gets to, let's say, 3,000, right, which is where most investors are expecting the gold to get to. Set an alert. Now, what happens is when the market gets to $3,000 per ounce, Octa is going to indicate to you on the mobile app or even here that the gold has gotten to 3,000. And you can use this for pending orders as well, you know, or just to get an indication of what to do. If you have your setups already on this market and you want the market to tap into this zone before you trade, you can use the alert, and Octa will go ahead to give you that information when it is time. You can also use the AI pattern feature. For example, there's some things that you may not be able to see here. You can just come up here, click beside new order, click on AI pattern feature, click on support and resistance, and then it shows you where support is, shows you where resistance is. You can go ahead and copy to chart, and boom, it's on your chart now. It's amazing, right? Exactly. And you can also use space towards the right hand side. You can see space where experts give you, you know, explanations, help you understand exactly what they are saying in the markets. You can combine this with your own analysis, you know, boost your confidence and even trade better. You can also make your deposits, your withdrawals, internal transfer, look at your operation history, and also check the economic calendar using Octa Trader. Now, you will not get access to space or access to the AI pattern feature if you're not using Octa Trader. So you have to create an Octa Trader account when you open your trading account with Octa, so you can get access to this amazing. But you'd also be able to access the economic calendar, right? You'll be able to do that. But for these technical features that are really good, you need to create an Octa Trader account. All right, guys, this is the Q&A session. So if you've got questions for me, you can go ahead and ask me your questions. If you've got questions for me, you can go ahead and ask me your questions. If you've got questions, you can go ahead and ask me your questions. How does the DXY interpret what happens in the dollar and the US 30? So mostly the dollar, right? Mostly the dollar. Now, most people view the dollar as a safe haven commodity. And if you look at gold, gold has been on fire lately, breaking past 2,982 per ounce. But why is it going up so much? Now, again, guys, most people are worried about trade wars, trade fights. The US has placed tariffs on goods coming from countries like China, Mexico. This country has also responded with their own tariffs on US products. What this trade war does is it makes investors nervous. And when they feel uncertain about the economy, they tend to move their money into gold because it's considered as safe and valuable no matter what happens. Imagine you're saving money in the bank, right? But all of a sudden, the banks seem risky. Instead, you buy gold because you know it's always going to have value. That's what investors also do. Let's see if we have any other questions. Guys, no questions would make me realize that this was a very comprehensive session. So if you have questions, go ahead and ask your questions. I'll be happy to answer all your questions. And while you're asking your questions, remember the Octa Trading app offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it this far, this is the promo code that gives you 100% bonus on your deposit. The promo code is Ambrose E100. Now, if you're looking to make a deposit with Octa, you can use this promo code type it where you're making your deposit. There's going to be an area for promo codes, or you can go to the promo code section using the navigation button and you can type in Ambrose E100. This promo code gives you 100% bonus on your deposit. Now, there's a certain volume to trade to be able to withdraw this bonus to your bank or to your trading account, so you can stay aware and keep observe that when you're making your deposit, so that you can know the volume to trade. You'll see it when you're making your deposit, and then you'll be able to withdraw your money to your bank accounts if you want, or you can use it to trade more and make more profits. Key takeaways from today's session: we looked at the instruments, mostly the DXY, right? And I want you guys to be able to analyze these instruments, understand how they work and how they behave under various market conditions. I also want you guys to be able to review your actions, reflect on your decisions to know what worked well and what can be improved on. All right. You can use the Octa economic calendar to keep up with latest market news and updates and trends, and use educational resources like these live sessions that you come on, the webinars, all these videos that you have on the Octa Broker YouTube channel. You can use this to increase and enhance your understanding of trading strategies and tools in the financial markets. Guys, I'm still checking. I don't see any questions. All right. Well, I just remembered I didn't give my bias on gold. Well, concerning gold, now a lot of experts and investors, they believe that gold could go even higher, possibly above 3,000 per ounce soon. And many investors are buying gold because, the economic uncertainty is expected to continue, and also the lower rates in the future are expected to come in as well. So that's what we're looking at. Gold is pretty much bullish. We don't have any confirmation to start selling gold, except you want to scalp some retracements, but you're more comfortable trading with the trend than against the trend. So we're going to continue to look for buy opportunities on gold and capitalize on that. Guys, we value your feedback. Please take a moment to fill out our survey. Your feedback is very essential for us to improve our future webinars. So you can scan the QR code or use the link in the description. It's going to take just 1 minute of your time. You can fill out that form or fill out the survey and help us make, better webinars in the future. I'm still checking to see if we have any questions, but I don't know, no questions. All right, guys. Thank you guys for joining. This was a really amazing session. Thank you guys for joining. And I'll leave you guys with this information. Now, trading is not about luck, right? It's about discipline. Every trade should be seen as a lesson. Every drawdown, every, unprofitable trade should be seen as a tuition. And every profit you make is as a result of preparation. The real edge is not strategy. It's in how you execute your trades under pressure. Most traders, or the best traders, they don't react, they anticipate. So as a trader, you don't want to let your emotions dictate your moves. You want to stick to your plan. You want to respect your risk. You want to trust the process, because you know that consistency is what separates the winners from the rest. So as you approach the charts, remember, success is not about how fast you make money. It's about how well you manage it. So stay focused, stay patient, and keep refining your craft. The market rewards those who play the long business, who trade in the long business. I'll see you guys in the next one. Bye, everyone.